Welcome to XM.com. You're watching the Daily Market Comment by Haralabos Tisuros. I'm Cristina Marujas. The US dollar underperformed against all the other major currencies on Tuesday as weak data added to hopes that the Federal Reserve may need to slow its aggressive pace of interest rate hikes. Market participants hold the view that recession risks are growing, and weak data add credence to that view. Considering also reports that the Fed may slow its interest rate increases as soon as in December, they have brought down their rate path projections. According to the Fed Fund futures, they are still fully pricing in a 75 basis points hike for next week's gathering, but they are split as to how officials will proceed in December. As for the terminal rate, markets now see it at around 4.9%, with a full quarter-point cut still priced in by November next year. This could continue to weigh on the greenback, but with the Fed still being the most hawkish central bank among the majors, a trend reversal discussion seems premature for now. The pound took the most advantage of the greenback slide yesterday as new UK Prime Minister Rishi Sunak pledged to lead the economy out of an economic crisis. Jeremy Hunt, who was reappointed as finance minister, is scheduled to officially present a budget plan on October 31st, and remains to be seen whether investors will be satisfied. However, the pound is not only driven by politics. The probability for a full percentage point hike by the Bank of England has dropped to around 35%. A slower rate path by the bank may not be indicative for taming double-digit inflation, and thus traders remain more concerned with regards to the performance of the UK economy, and not only. Due to the UK's twin deficit, the pound has developed strong risk-linked characteristics, and thus anything reviving fears over a worldwide recession could also weigh on the currency. The Aussie also beat the dollar as the larger-than-expected acceleration in Australian inflation during the Asian session today may have encouraged some traders to steepen somewhat the Reserve Bank of Australia rate path projections. Wall Street extended its recovery yesterday despite the disappointing economic data out of the United States. 74% of the S&P 500 companies that have already reported beat expectations, helping indices to move further away from their recent lows. That recovery may continue for a while longer, but with major central banks still raising interest rates to bring inflation to heel and recession fears still elevated, the recovery may not last for long. This was the Daily Market Comment here at XM.com.